had a very strong engagement process with the 14 gas distribution companies, with the Ministry of Petroleum and Natural Gas, and with the holding company, the Gas Authority of India, at the senior-most levels, and also at their operating levels. And they have recognized the potential in this whole initiative for their business. And I'm actually worried that they've gone out of their way and people are not having to wait at all. So a Freedom 125 owner gets a VIP pass into the filling. But we've got an eye on the scale up. So obviously this will not be possible to do when things really scale up. But as things scale up, we've been in discussion and these companies are watching very carefully. And I don't think they will shy away from putting in more dispensing stations and ensuring that the two-wheeler CNG customer doesn't require to wait. The filling itself takes only less than a minute, a couple of minutes.
Got it. That's helpful. My second question is related to some information you shared on the prepared remarks on electric three-wheelers. So you mentioned that now it's available in 700 locations. So just wanted to understand if you were to contrast the number of locations where the ICE three-wheeler is available versus the number of locations where the electric three-wheeler is available, what is maybe the potential incremental network-related growth potential on the electric three-wheeler business, considering that there may be 35% market share in electric three-wheeler versus 78% in ICE three-wheeler. Just trying to understand what the network gap there is and how that gets bridged over time.
Well, as things stand, we have reached the 700 number in the opening days of October. The numeric reach is around 1,000-1,100 stores for three-wheelers. But the weighted reach, I would say, with these 700, we are covering almost 90-95% of the industry. So it's not linear because now there is a long tail. And our major task is accomplished with this 700. We had thought we had this number of 700 in our mind. Now it will just grow organically, not in a campaign manner.
Got it. That's helpful. Just a housekeeping question. Lastly, could you just share what the spares number was for the quarter, please?
So the spares revenue for the quarter was about 1,500 crores.
140.
Got it. Thank you very much and all the best.
Cheers. Thanks.
Thank you. The next question is from the line of Binay Singh from Morgan Stanley. Please go ahead.
Hi team, thanks for the opportunity and thanks for the very detailed remark. I'll actually focus on raw material to sales. When we look at that line item, it has gone up by around 130 basis point quarter over quarter. In the commentary, you added that commodity net of pricing was a 25 basis hit. Is it fair to assume that the remaining 100 basis point came largely because of electric two-wheeler?
Yes, that's right. The largest drag for the quarter was the expansion of Chetak. And very slightly, I'd say the filling in or the 30,000 odd units that we put out of Freedom. But yes, the bulk of it, let me ascribe it to Chetak expansion.
Right, and within that, PLI incentive, which we started to count last quarter, so that is getting accounted this quarter as well, right? So is there any change in that accounting?
No change on that front, Vinay. I think the only piece is that you recall that in June we put in place the affordable Chetak variant, which currently sells between 96 and 100,000 across states. The PLI approval for that came in the course of the quarter. So there's a time-phased impact of that, but from a recognition standpoint, no change in the policy.
And this entry level, for the number you said 9,600 is for the quarter, the entry level Chetak.
No. I said we had introduced the affordable Chetak variant, which is priced at 96,000.
Yeah.
100,000 across different states. For that particular variant, as we call it, which is the Chetak 2901 or 2903, that which was launched in June, the PLI approval for that, the certification for that, came in only in the midst of quarter 2, and therefore we have started accounting for PLI or accruing for PLI only after receiving that certification. In terms of policy of how we accrue for PLI, no difference between quarter 1 and quarter 2.
And just last two questions again linked to this only. So when we say flat margins in the EV portfolio, right, which basically means 0% EBITDA margin, right? So that commentary of flat is basically at the EBITDA level for EV. And lastly, just like we've seen a very good scale up in EV, and in fact, as you launch more variants, that will accelerate. So when you're guiding for flat margins, you are kind of accounting for potential, because that's basically the one part of the portfolio which is margin dilutive today, right? So you are in a way accounting for acceleration in EV in your sort of maintaining margins guidance.
So let me explain. I think you've got it, but for the benefit, in case it needs to get clarified, I did make a mention that when you look at the electric portfolio, scooters plus three-wheelers put together, we're EBITDA flat in absolute terms, and therefore you can assume absolutely margin flat, because fundamentally the scale-up of the electric three-wheelers is offsetting the drag of Chetak. Yeah, so that's one part. So therefore the cash burn on the electric portfolio is now flat. There is no cash burn because the two are offsetting. However, in terms of the impact on margin, because the enterprise operates at 20 and the electric portfolio is flat, there is a drag effect of that, and therefore you see that reflected in the gross margin impact. What I did say in the last comment was that, it is like every other company would want, it is an attempt to continue to dynamically manage this P&L, but we'll have to continue to make, investments for competitiveness. And much of those investments would come on electric scooters and Freedom, depending on how the commodity or the competitive context evolves, right? But, the intention is to try and continue to dynamically manage the business for margin.
Perfect. So that is very clear. Thanks a lot, Dinesh. Thanks.
Thank you. The next question is from the line of Kapil Singh from Nomura. Please go ahead.
Good evening, sir, and congratulations on the strong quarter. I would like to know about the festive season. How has it gone so far for Bajaj Auto and the industry, and what is your outlook for the season? If you could share some color across segments also, that would be helpful.
The like-for-like comparison with the same days last year and this year, till the share plus whatever 1 or 2 days, it's a bit muted and less than what was the expectation. The industry, the motorcycle industry is almost flattish, 1 to 2% growth only. We had thought that it would be upwards of 5-6%. Though we got some indication of this, though Pitru Paksh period is low, but it was much lower than our expectation. So we had entered this period a little bit very sort of watchful. And if this has to be deconstructed into segments, then the industry in the 100cc segment is in negative, and it is marginally positive in the 125cc plus segment. We have declined faster than the industry in the 100cc plus in the 100cc segment. It's become a little bit of a red ocean. Given all the big stocks and all, you will see. I'm sure you would have monitored. There are discounts of up to 5,000 to 6,000, 7,000 rupees on a bike, which is ESRP of 65,000. So you can well imagine what is happening out there. But we are moving faster than the industry in the top half. But with all this, I must say to you that we should not draw the full season's conclusions as yet. The places like Uttar Pradesh and all are doing extremely well, but Northeast, some states of the South, which are actually non-festive states, they're not doing so well. And I've seen in the past that, the last 2 weeks, the final overs can swing the festive substantially. So we are waiting for the entire festive to get over and for it to settle and then see how things have happened. I don't think, we'll reach 8-9% growth. I would be surprised. But I hope that we should be there at 3 to 5% growth as an industry.
Thanks, sir. Very, very helpful. We'll look forward to the slog overs.
Correct.
Another one is on Chetak. If you could talk about, because the volumes for Chetak have increased and you're scaling up there, but you have also come out with new variants, and most of the players also talk about falling battery costs. So in that context, how have the margins directionally moved for Chetak? I know you don't share the number, but at least directionally, how are they moving? And if you could qualify when you're talking about your flat EBITDA for EVs, do you account for the PLI, because you got PLI only for half the quarter for two-wheelers? So, yeah.
I'll take the last piece. When I did make a mention of the EBITDA for the electric portfolio being flat in absolute terms, we have accounted for the PLI. Of the 3 variants of Chetak that we have in the market, that we've got a variant at 1,35,000, another one at 1,15,000, and the affordable variant that we launched in June, ranging between 96 to 100,000. Of the 3 of them, 2 of them were accounted for in terms of PLI for the full quarter, because the certification for that had come in much earlier. You recall I had made mention of that in the last quarter's call as well. It is only for the 3rd variant that we had launched in June that the certification had come in the midst of the current quarter, and so only after it came had we accounted for it. Right? So different positions on the former 2 which were already in existence, and a mid-quarter accounting and accrual for the 3rd one that was launched in June. Right? So, but yes, to your point, does Chetak PLI and E3-wheeler PLI form part of the electric EBITDA that are skewed to be flattish? The answer to that is yes. Have margins improved for Chetak progressively over time? Yes, you recall that we had spoken about very significant streams of work that have been put into place on R&D and fundamentally tech. Those obviously have borne fruition. So if I not only comment on quarter, but essentially over a 4-quarter horizon, I fundamentally say much of the expansion of Chetak that you have seen has been funded largely out of the cost reduction effort. Yeah, which is the reason why we've been able to grow the portfolio from 20,000 units last year to 70 right now without a drag coming in on the overall enterprise margin.
Sir, what would be your break-even level for this business in volume terms?
Well, Kapil, the break-even, I'm guessing your question is on Chetak alone.
That's right.
So two parts to what drives break-even, right? Pricing and costs. And you heard Rakesh saying that, there is a new platform that is in the offing that will significantly reduce costs over and above the cost reduction effort that we've already seen. So I can see line of sight on further cost reduction playing out between quarter 3 and essentially quarter 4 as the new platform comes into play. Yeah. What I'm not clear about is where will market pricing settle. And you have seen and you are aware of the extent of discounting that is prevalent in the market, right? So I can tell you that we will certainly get better on cost structures with the new platform on Chetak that comes out later this quarter. But where pricing settles and how much of that needs to be really will get offset by the price table moving down or by discounting the market, because our intention is to remain very competitive. That in a sense will determine the path to profitability in the future. It isn't as much about fixed costs, because recognize, as an OEM that already has most of its facilities in place, we don't have to spend substantial amounts of money burning fixed costs in many ways. So it's not really, the biggest driver of profitability on this is not really going to come out of operating leverage for us as much as it is between the cost and price equation.
Okay. And I can assume initially your focus will be more on leadership.
Yes, of course. Even last year when our market share was in single digits, we were saying that over a period of time, we are aspiring to be absolutely, for a leadership position in both e-autos and e-two-wheelers.
Okay, sir. Thank you very much. Have a good evening.
Thank you.
Thank you. The next question is from the line of Eamon Pirani from JP Morgan. Please go ahead.
Hi. Thanks for the opportunity. I had a question on emission regulation first, and then maybe some clarifications on the result. In April 2025, we are supposed to have the next phase of OBD norms, if I'm not wrong. So just wanted to get a sense from you, is there any cost call out or any significant inflation that we should be watching out for two-wheelers?
Well, it's not significant. There will be cost increases. It is not that the emission norms are being tightened or anything, but this is the in-use monitoring, which is going to be put in place, which requires certain sensors and certain diagnostics.
Okay, so should it be
Sorry, go ahead.
Sorry. No, I was just asking that. I think should it be in line with what happened when the OBD1 came in, or can it be lower than that as well?
I don't recall exactly the number, but it will be in the same vicinity. Yeah. Yes.
Okay. Thanks for that. Secondly, on the festive demand trends that you mentioned, so say even if we get to say 3 to 5%, which you expect, is it something that we should think about for the rest of the year and going into next year, or is it just you're saying a festive blip because last year festive we saw a surge, or is this like the growth you are seeing going forward for the industry?
Yeah, well, if it turns out in that zone, then I would expect quarter four. Then see, November will be a low, and then December, is in any case last month of the calendar year. So I would expect that the industry was thinking that we should be in the zone of 5 to 8%. We'd probably be closer to 5% than 8% for the year.
Okay. That's helpful. And lastly, on Brazil, if I'm right, I think till 20,000, which you are right now, I think the requirements for localization are lower. And since you are now planning to go to 35,000, are there any measures for localization, or do you already have tie-ups for localization which are being done there?
Yes. So there is a different set of requirements beyond 20,000, and that work has already been commenced. In fact, most of the equipment is in place, but some of the capital infusion which will take place is for some balancing equipment which will require to be put in place over there. But the engagement with the vendors has already commenced, and it's a lead time of about 7-8 months. We should be able to wrap this up by middle of next year, certainly by August of next year, when the capacity will go up to 35.
Okay. And last one, if I can just squeeze in one more, the KTM or the that entity loss that you have accounted for. Now, obviously, I'm guessing that there are a few one-offs here in terms of the bicycle business. But how should we? Obviously, it's an associate, but it's a large loss, even if we spread over 2 quarters. How should we think about this? Is the business improving incrementally, or should we expect more pain going forward for the next few quarters?
So I think, at this point of time, we will be guided by obviously the statements that PMAG has put out, because they are bound by their regulatory requirements of listing and information access. So the guidance statement that they have put out, essentially, I think it was 26th of August, is really what would hold. So at this point of time, I'd like to keep it at that. and not offer anything because we just have to stay true to that process. But any development on business and clearly many moving parts in that is best announced and the progress of it commented upon by them.
Sure. Thanks for this. I'll come back in the queue.
Thank you. The next question is from the line of Jinesh Gandhi from Ambit Capital. Please go ahead.
Yeah, hi, sir. My question is on Freedom CNG. So, any initial sense on the customer profile which we have? Are these customers who have evaluated Freedom 125 against 100cc motorcycle, or is this creating a new segment of customers? What is the feedback you're having on the customer profile of Freedom?
Well, we have understood that the spectrum of customers who have bought into Freedom 125 is very, very wide. The largest cohort is from the 125cc segment itself, but the largest itself is only 15-20% or 18%. The source of businesses, even from 150cc, from scooters, from 100cc entry level, 110cc, so it's very, very wide, and which in a way is very interesting and encouraging for us, because it is telling us that the sources of business cut across the conventional segments.
Okay, that's very interesting. We are seeing also customers from 150cc and scooters as well. That's interesting. Secondly, in last call we had mentioned PLI would have contributed about 50 basis point benefit at standalone level. But given that we have seen increase in share of EVs and more products being qualified in 2Q versus 1Q, would this 50 basis point be materially higher in 2Q now?
So, Jinesh, I'm not going to go into the reconciliation of Chetak financials because obviously there's an expansion impact, there's a mix impact, and there is a PLI impact and material cost. So many moving parts. I'd like to stick to the commentary I made that this quarter we operate for a period of time on the third variant that we had launched without PLI. As soon as that certification came in the middle of the quarter, we accrued for it. For the rest of the accounting of PLI, the policy remains unchanged relative to what we had done in quarter one. But I think PLI in isolation is only one part of the picture, because you've got to see how we are managing multiple lines to be able to fund the expansion of the electric portfolio.
Sure. No, that's very commendable that we are at EBITDA breakeven now. That's job well done. Two clarifications. One is at Pierer Mobility, any sense on what could be one-time loss in this for the restructuring expense? If you're aware of that, or else I'll go through their release.
Yeah, so I think and I'm just calling out from their statement.
Sure.
I think they had called out extraordinary impairments and restructurings of 75 million euro in the first half.
Okay, that's a very large number. Okay, got it. And secondly, you mentioned exports are 415 million or 450 million in 2Q?
I said exports was 450 million.
Got it. Okay, great. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Pramod Kumar from UBS. Please go ahead.
Yeah, thanks a lot for the opportunity, sir. The first question is on the Chetak network. You talked about the product being available in 4,000 stores. So just want to get a context around that as to what's our total store count network-wide, and also where is Chetak as we stand today in terms of the network presence?
So we have 250 odd exclusive Chetak stores, and in addition to that, right now we are in about 3,000 odd stores which are shared with motorcycle business, which are sub-dealers as well as main dealers and their branches. This 3,000 over a period of 3 months or 4 months will go up to 4,000. And obviously the 250 odd stores we propose to continue to expand them, because the majority of the sales is being driven and more important through those exclusive stores, and more importantly, establishing benchmarks of customer care and brand development is happening through the exclusive store, which gives us much better ability to discharge those functions.
And Rakesh, what would be your total network count right now for the traditional business?
So the total network count for the motorcycle business would be about 5,000, which includes all the sub-dealers, main dealers, branches. And then separately, you obviously have KTM and three dealers, etc.
So in a way, we'll have more runway for Chetak expansion beyond 4,000 as well, as the demand kind of evolves in smaller markets.
Yeah, exactly. It depends on how pervasive the demand and how grassroots level the demand is.
And just sticking with EVs, you talked about a new variant is it a new variant or it's going to be a new model under the Chetak umbrella or a new variant under the Chetak umbrella? Because we've stuck with Chetak so far for the entire lineup. So are you looking at a new sub-brand which is different than Chetak with different positioning, or how should one think about it?
By the way, we are not stuck with Chetak. We have, it's a very conscious and deliberate decision, and we consider it to be a very important asset. There are a lot of people who are coming to Chetak because they're very, very fond of the brand. So Chetak is our umbrella brand for scooters. We will continue to have a portfolio of different models under the Chetak umbrella. And so to that extent, the franchise of Chetak will grow. Chetak obviously started with one product, but the portfolio is being expanded. So what you will see from middle of November onwards is, now I don't know how you perceive a variant or a model, but there will be few new Chetaks beginning mid-November to Jan.
No, because what I wanted to understand is like if it's a new brand then or a new sub-variant with Chetak or something, then it's a new design.
No, it will be Chetak in this similar styling, but with much better propositions.
Sounds good, sir. No, when you have a new design that brings more uniqueness and more footfalls in a dealership, that's the only reason why I asked that, because we've seen that with guys like Ather who expanded the design language and the volumes have expanded. So I was just trying to probe on that. Second question on the financial side. Revenues have jumped quarter on quarter by 10%. Exports have also done well. You've stepped up your efforts on campaigns and launches as well. So can you just explain in that context why would our other expenditure be marginally down quarter on quarter in absolute rupee terms, and even employee expenses fall by 10%? Because if I recollect, 1Q you said when there was a sharp jump QOQ, it was more recurring kind of there was no one-off as such. So if you can just help us understand these two cost structure movement quarter on quarter.
Sure, Pramod. So let's first talk other expenses. Look, I think the difference in other expenses is just so marginal that there's really nothing to call out, because this spreads across very, very nominal numbers across multiple lines. So the quarter-on-quarter impact, which is under 10 crores, just take it as give or take across multiple lines, none of which is worthy of call out. But on a year-on-year basis, you're seeing a step up. That step up essentially is coming from three reasons. The first, because overall volume has moved up, so coming in from all things to do with volume, right? So it's volume-related expenses. The second is stepped up investments behind marketing, right? And the third essentially is on accounting for royalty that we have for Triumph, as Triumph has scaled up. So those are the three factors which have accounted for the movements in the other expenses year on year. As for the employee cost, why is employee cost this quarter lower compared to the previous one? Fundamentally, a couple of reasons. One, last quarter had a leave encashment true-up that was done because the exercise was concluded then. Therefore, it was a one-off which was trued up, and the impact of which sat in the last quarter. The second is that we've had